OSP, a real titan in Thailand's consumer goods scene, just hit a staggering billion baht in profit. Today on the Deep Dive, we're cutting through the noise, sifting through the latest reports, the projections, to uncover exactly how they pulled this off and where this market leader is heading next. Get ready for a shortcut to being truly well-informed about OSP stock. So let's unpack this for you. We're diving deep into Osotspa, or OSP. It's a name that's pretty much synonymous with everyday essentials in Thailand, right?
Absolutely.
When you think of those powerhouse energy drinks like M150, Lipo, or popular personal care items, soaps, face washes, you name it, OSP is very often the company behind them. They've built this long-established history, a really diverse product portfolio that also includes health and candy products. And it's all supported by this incredibly strong nationwide distribution network. It's a huge presence that helps them generate such stable revenue and cash flow, which, is crucial in the consumer market.
And what's really insightful here, I think, is that OSP isn't just like a player. They are a dominant force. They command, get this, a 44.6% market share in energy drinks.
Wow. Nearly half.
Yeah, and even higher, 47.0% in functional drinks. This isn't just about big numbers. It's about competitive insulation, really.
Yeah.
Holding almost half the market in these key categories gives them incredible pricing power, resilience. It lets them weather economic storms much better than most competitors. This kind of market strength is fundamental to why they can deliver such robust financial results.
And speaking of robust financial results, the latest numbers, Q2 of 2025, are certainly turning heads. The big headline, and it's quite something, is that their operating net profit soared, a record high. But here's the puzzle, right? This record profit came alongside a decrease in total revenue. That sounds like, well, counterintuitive. My first thought is, are they cutting corners? Or is this a sustainable shift? What's the real story there?
That's an excellent question, and it really gets to the heart of OSP's current strategy. Let's dig into the specifics for Q2 2025. Their reported net profit from normal operations hit 1,010 million baht. Impressive.
Over a billion baht.
Right. That's a significant 9.4% increase year-on-year and 4.0% quarter-on-quarter. Basically, the highest net profit since they listed on the stock exchange. Now, about that revenue puzzle you mentioned, total revenue was 6,856 million baht. That is a slight decrease, 7.0% year-on-year and 4.8% quarter-on-quarter. Sales revenue specifically declined by 7.3% year-on-year.
Okay, so why?
The main reasons were internal. Some sales and distribution restructuring in their domestic beverage segment, basically optimizing their channels, and also a planned reduction in OEM glass bottle production. They were kind of moving away from a less profitable area there.
Okay, so lower sales but record profit. That implies some serious efficiency gains, doesn't it? How did they manage that, especially with their gross profit margin?
Precisely. That's the key. The gross profit margin, or GPM, which, just shows how much money they make from products after the direct costs of making them, it reached an all-time high.
All-time high.
Yeah, 41.9% in Q2 2025. That's a strong jump. 3.7% year-on-year, 1.6% quarter-on-quarter.
And what drove that?
Well, a couple of things. A higher proportion of revenue came from international markets, which usually have better GPMs. Plus, increased sales of their higher-margin personal care products. They also benefited significantly from reduced raw material and energy costs. OSP was proactive. They managed to lock in raw material prices until Q3 2025.
Smart move.
Definitely. It helped maintain that GPM around the 40% mark. And on top of that, their selling, general, and administrative expenses, SG&A, also decreased, down 5.9% year-on-year. So it really reflects efficient management of their sales and marketing costs, cutting out unnecessary spend.
That's a really comprehensive picture of their operational strength.
Yeah.
Very efficient. But how does this translate to their sort of foundational financial health? Let's zoom out to the balance sheet. Assets, liabilities.
Right. Looking at the balance sheet as of June 30th, 2025, total assets were 24,579 million baht. That was actually down slightly, 2.2% from the end of 2024, mainly because of reduced property, plant, equipment, and inventories. Kind of a leaner operation, but total liabilities dropped significantly, down 20.4% to 7,435 million baht. And that was primarily due to strategic debt exit.
Paying down debt, always good.
Exactly. And this, in turn, allowed shareholder equity to rise by 8.6% to 17,144 million baht, boosted by increased retained earnings. But the most telling figure here, I think, is their debt-to-equity ratio. It stood at a very, very strong 0.05 times.
0.05, that's incredibly low.
It's exceptionally low. Like you said, minimal leverage. It gives them immense strategic flexibility moving forward.
So OSP is operating super efficiently. Their balance sheet is incredibly strong. For you, the investor, looking at the company's valuation, what do these strong financials mean in terms of key ratios? What should you be looking at?
Well, when we look at the latest figures and forecasts, analysts are seeing good value. OSP is trading at an estimated price-to-earnings ratio PE of about 14 times for 2025. That's according to Yuanta Securities. Trinity forecasts it slightly lower, 13.9 times.
And just remind us, PE tells us.
Right. It tells us how much investors are willing to pay for each bat of the company's earnings. And that 14x figure, it's notably lower than the average for the fast-moving consumer goods or FMCG sector.
So potentially undervalued compared to peers.
Potentially, yes. It suggests it might be an attractive entry point. Then you have their forecasted earnings per share, or EPS basically, profit per share. Trinity forecasts that at 1.25 bat for 2025. And finally, price to book value, or PBV, comparing market value to book value. Trinity forecasts that at 3.09 times for 2025. Taken together, these figures really highlight the company's strong financial position, efficient cost control, makes them quite attractive if you prioritize fundamental strength.
Okay, beyond these impressive numbers, let's look ahead. Where is OSP heading? They've laid out this, ambitious 5-year plan, aiming for $40 billion in revenue by 2028. How do they plan to get there? What's the core strategy?
They've outlined 5 core strategies, yeah. And together, they really paint a picture of a company that's evolving. It's not just about selling products anymore, it's about optimizing value. First, they aim to grow the core. Pretty straightforward: strengthen existing businesses, maintain that market leadership with a smart brand portfolio strategy, boost sales across all the established product groups. Second, they plan to seed the future. This is about driving innovation, new products, adapting existing ones. Think M150 Sparkling, that's a fresh take on a classic.
Right, I've seen the ads for that.
Or Cvit, increasing the vitamin C to 1,000 milligrams and specifically targeting pharmacy sales now, catering to health-conscious consumers' different needs.
So new twists on old favorites, plus expanding into new channels, shows a real understanding of changing consumer demands. But you also mentioned higher margins internationally. What about their plans beyond Thailand?
That's their third strategy: expand internationally. OSP is pursuing cautious but strategic growth in the region. There are plans to enter Vietnam with new canned beverage products, for example. And what's absolutely critical here is that significantly higher average gross profit margin in international markets. It's around 40% overseas. Compared to closer to 30% domestically. So that's a big difference. They're also planning an aggressive push to boost personal care sales in neighboring countries, aiming for like 2 to 3 times growth in 2025.
Wow.
Yeah, this focus on high-margin international growth is a very shrewd move.
That 40% GPM internationally is definitely compelling. But, expanding into new places like Vietnam,
Yeah.
it's not always easy, right? What hurdles might they face, and how confident can we be they'll succeed abroad?
You're right. International expansion always has complexities. Local regulations, consumer tastes, supply chains. It's a lot. But OSP's approach is described as cautious and strategic. That suggests they're doing their homework, probably using careful market research, maybe partnerships, leveraging their existing regional experience. And that strong financial health we talked about, it gives them the capital to make these moves thoughtfully, not rush things.
Okay.
Confidence comes from their track record, really. Adapting products, commanding strong market shares, even in different contexts. It shows their brand power travels well. Now, continuing with their strategies. The fourth pillar is inorganic growth. Think mergers and acquisitions, M&A. They're actively looking for deals, leveraging their strengths in similar product areas. Apparently, they're negotiating 3 or 4 potential deals right now.
Really? Any hints about what kind?
Not specifically, but they expect at least one to actually happen in 2025. And that strong, nearly debt-free balance sheet means they have the firepower to acquire valuable assets if the right opportunity comes along. And finally, the fifth strategy is organizational transformation. Improving efficiency using digital tech, adjusting internal processes, developing their workforce, aiming for operational excellence and sustainable profit growth across the board.
Sounds like a very holistic approach,
Yeah.
growth on multiple fronts. So what are the main engines really driving OSP forward? And, what are the potential bumps in the road for this ambitious plan?
Okay, on the positive side, several factors are really powering OSP's growth. That robust cost control we discussed, locking in raw material prices, efficient SG&A, that's a huge advantage, gives them predictability. They also really excel at product innovation and diversification. They're not just resting on their laurels.
Like the M150 sparkling example.
Exactly. Launching new things like that with celebrity endorsements, adapting existing products like Cvid or Calpis Lacto packaging. It shows they're actively responding to consumer demands, attracting new groups, younger people, health-conscious individuals.
So constantly evolving with consumer tastes, that seems absolutely key in a market moving this fast.
It really is. Their international expansion, chasing those high-margin opportunities in neighboring countries and new markets like Vietnam, that's another strong driver, opens up new revenue streams. Crucially, that strong financial health, the low debt, it gives them huge flexibility for strategic investments, including M&A. Think of it like having a full tank of gas and a powerful engine. They can go where the opportunities are. And their sharpened focus on core businesses, like divesting non-core, underperforming assets, that allows them to put more resources into the high-growth areas.
Those are definitely compelling strengths. But every company faces challenges. What are the potential negatives, the risks? And how is OSP managing those?
Right, even a giant like OSP isn't immune to, let's say, headwinds. They acknowledge risks from a sluggish global economy and, of course, intense competition in the energy drink market. That's always fierce. A significant challenge recently has been geopolitical risks, particularly the situation in Myanmar. Political instability, the currency depreciation, the Kiat foreign exchange controls. It's severely impacted their OEM glass bottle joint venture there, led to continuous losses, actually.
That Myanmar situation sounds like a real drag, especially when the goal is profit growth. How quickly can a company like OSP really cut losses and pivot away from something like that without more pain?
It's a challenging move, but necessary. OSP has actually decided to sell its shares in that Myanmar glass bottle OEM business. The plan is by the end of 2024.
Okay, so they're getting out.
Yes. It's a strategic exit from a non-core loss-making venture. Allows them to refocus resources on profitable core businesses. It's a decisive cut losses move. Might be some short-term admin costs, but the long-term benefit of shedding that underperformer should be substantial. Beyond that, there's the ongoing risk of commodity price volatility, sugar, glass, natural gas, even climate change impacting agriculture.
Right.
OSP manages this through, market intelligence, long-term contracts, trying to diversify sourcing. And finally, their commitment to ESG, environmental, social governance, aiming for carbon neutrality by 2050, net zero by 2065. That brings regulatory pressure, social pressures too, but it's also becoming a strategic advantage long-term. Builds resilience.
Okay, with all these strategic moves, the impressive financials, the big question for many listening is, what do the pros think? Let's turn to the analysts. What's their take on OSP's valuation and outlook? What are the price targets looking like?
Well, the outlook from the financial institutions we track is largely positive. Yuanta Securities recommends a buy. Their target price is 20 baht per share. Trinity Securities also has a buy recommendation. They've set a slightly higher target price of 22 baht per share for 2025. They used a DCF method, discount and cash flow, to get there.
Valuing future cash flows.
Exactly. And the median consensus target price among analysts, it stands right at 20 baht. Now, with the current stock price, as of September 12, 2025, being around 19.2 baht, these targets suggest some potential upside for investors. Definitely makes it a stock to watch.
And OSP often gets highlighted as a high dividend stock that always catches the eye, especially for long-term holders. How stable are those payments, and what's the outlook for future dividends?
Yeah, dividends are a key attraction here. OSP has a clear policy. They aim to pay out not less than 60% of their net profit. Looking back, they paid 0.90 app per share in 2022. Then a substantial 1.65 baht per share in 2023, though that included a special dividend from selling some shares.
Oh, okay.
And then 0.60 baht per share in 2024. Looking ahead, analysts are quite optimistic. Yuanta forecasts 0.90 baht per share for 2025. That translates to roughly a 6.2% dividend yield based on current prices.
That's pretty good.
Very good. And then they see it climbing to 1.2 baht per share for 2026. That would be around a 7.9% yield, which, is considered outstanding for an FMCG stock. Trinity's forecasts are also strong. 1.25 baht for 2025, about a 5.2% yield, and 1.27 baht for 2026, roughly 5.3% yield. The latest declared dividend was 0.40 baht for the first half of 2025. So yeah, overall, that high dividend yield makes it attractive for long-term accumulation for income-focused investors.
All right, finally, for those who follow the charts, the technicals. What are the current signals for OSP stock? What should you be watching in terms of trends key levels?
Okay, based on the latest data we have, September 12, 2025, the current price is around 19.2 about. It traded between 19.30 high and 19.2 low on that day. Looking at the 52-week range, it's been between a high of 24.3 obey and a low of 12.90 about. So the current price is sort of in the middle of that range, not at an extreme.
Okay, trend-wise.
Visually, the chart shows a recovery trend after a dip earlier in 2025. Recent price action is generally trending upwards. And the MCD indicator, that's the moving average convergence divergence, a tool traders use to spot momentum shifts, it's currently positive. That suggests some bullish momentum might be building.
Any key levels to watch?
Yeah.
Support, resistance.
Yeah, you'd want to watch for potential support around the 17,000 level. That's a point where the stock has historically found buying interest. On the upside, resistance looks to be in the 19.50 to 20.00 bat range, which interestingly aligns pretty well with some of those analyst target prices we just talked about. And daily trading volume shows consistent market activity, so there's decent liquidity there.
Well, we hope this deep dive into OSP has given you a much clearer picture of its strengths, its strategies, and the road ahead. Finally, if you have any other stocks you'd like us to cover, please do let us know. Don't forget to like, share, and subscribe to support our team. Thank you.